For more on this, let's bring in Jameel Ahmed. He's Chief Analyst at GTC. Welcome back to the programme, Jameel. Now, let's start with gold prices. They've fallen below $4,000 per ounce. Now, is this a result of profit-taking or the optimism around a possible trade deal between the United States and China?
I would say profit-taking. We've now had a downfall of somewhere around 10% from the highs, which were just above $4,400 just a couple of trading sessions ago, and now you've got the move below $4,000. It's a big move at just above 10%, so I would definitely look to see whether that move below 4,000, which of course was a historic and a psychological level, whether that might now trigger some further profit-taking that we dip below these levels. But essentially, I think the timing's coincidental with this, I'd say, optimism that US and China should finally sign a trade deal over the coming days and have that photo opportunity, rather than actually being the main driver behind the profit-taking that is taking place. Because we have to also consider that 2 weeks ago, where out of nowhere we had somewhat of a market meltdown, specifically in the crypto markets, where President Trump all of a sudden suggested those additional 100% tariffs on Chinese goods. That was not the catalyst behind gold prices exploding more than 50% year to date. So I can't say that because gold prices have now declined 10% from that level, that it's just based on the weekend optimism between US and China trade deal agreement.
And all eyes are now on the Federal Reserve's meeting this week. How is the likelihood of lower borrowing costs impacting markets at the moment?
Well, historically, lower interest rate narrative has been very supportive of world stock markets. And if you look at the continuous record highs that Wall Street have seen over the past couple of months, then of course that narrative still bodes true in 2025. What I look for from the Fed is already priced in that we're going to have a 25 basis point cut. But I think the main takeaways is whether we have any more dissenters that are actually asking for a 50 basis point cut and voting in that direction, and also what Jerome Powell might say in his press conference, because I don't think it's completely signed, sealed, and delivered that the Fed will move by December, and also by what amount of an interest rate cut based on the ongoing US government shutdown, which should hopefully conclude by then. But if we take into account that the government shutdown is now close to, let's say, 1 month, and it doesn't seem like it's going to be ended anytime soon, then the Fed have months of data to catch up on where they can really monitor what the interest rate outlook will be at the end of 2025, and more importantly for investors at that point, what might happen in 2026.
And there's also a number of earnings from the Magnificent Seven stocks later this week. What is Wall Street pricing in at the moment?
Well, if you look at the continuous record highs and all-time levels that Wall Street are continuing to meet, it looks like corporate America continues to do well despite any global economic optimism. Already, we've had around 29% of the S&P 500 companies release their earnings over the previous week, of which more than 85% have been above expectations. This week, though, is going to be the bigger week because you've got 5 of the Magnificent Seven recording their earnings, and also you've got the majority and the busiest week when it comes to S&P 500 companies, again announcing their quarterly earnings. So I do think we have a market risk event, but essentially there's no sign yet of corporate America showing any issues or fallings down from trade tensions or some economic weakness, and it seems to be that that's the reason why markets continue to hit record highs.
Jameel Ahmed, Chief Analyst at GTC, thank you very much as always.